Hi guys, Tim Melvin here, coming back at you. Meant to get a video out over the weekend, but we had just a ton of granddaughter time going on this weekend, so that really didn't happen. Last Wednesday, I drove up to Orlando to spend some time with my son. His fiance was out of town on some business matters and hang out with one of the world's two most beautiful granddaughters. And Saturday, spent most of the day driving back from Orlando. And then Sunday, the other of the world's two most beautiful granddaughters was over. And we did some movie watching and some swinging in the backyard and just having a big old time. And the video got pushed aside. It was another weekend, after the kids had gone to bed. It's surreal really to sit down and watch a European war playing out on the evening news and on the nightly news and the cable news channels. Uh, it's very strange to see Russia and Ukraine going to war for what, as near as the rest of the world can tell, is Vladimir Putin's own desire to bring Ukraine back under Russia's domination. I know he used to about the rallying cry of denazification and all that, but we don't really see too much evidence that there are a whole bunch of Nazis in the Ukraine. There are some right wing groups. They've had political, just like every other government in that part of the world, they've had some political corruptions and all sorts of goofy stuff going on. However, they had declared themselves independent from Russia back in the 90s. Nothing that I've seen in the Ukraine gives Russia the right to roll tanks the way they've done. But I also don't think that anything is going to change anytime soon. I know we've had quite a bit of discussion about the peace talks and how much better they're going, and that really sparked a nice rally in the Dow this morning. That the talks were moving forward. Of course, the stocks had went right on down. The Nasdaq is still down a rather impressive 1.85%. The Dow has rallied a little bit and is actually back in the green for the day here around the 330 mark, and the S&P 500 is off, not quite as bad as the Nasdaq, but it's getting whipped because reality sets in. Vladimir Putin has his entire self, his legacy, his vision of the world, as it were, tied up in this grand struggle to rid the Ukraine of Nazis. Just like his parents fought the Nazis, Vladimir is fighting the Nazis. It's a great article by a guy named Gary Carmel, calls himself the philosophical investor at Gary Carmel, that's CARMELL.com, about Vladimir Putin and some of his mindset and the history of it and how he views the world and his need really to lead a big struggle where the Russian people sacrificed to achieve beating the Nazis once again. I don't think he can mentally afford to back away from this. It will be the end of his reign if he does. This may lead to his downfall anyway if the Russian economy gets squeezed enough and the powers that be decide that maybe, just maybe, it's a good idea for Mr. Putin to finally go. We'll see how it all plays out. It's fascinating. It's not being well received by the markets, as you can imagine. It's really hurting inflation. There's been some talk that, well, the Fed's not going to move as fast because, the war in Ukraine is going to hurt the global economy. The war is going to hurt portions of the global economy. But guys, the inflation numbers are still red hot, and the war is not helping those. It's disrupting the supply chain for energy, for wheat, for all sorts of food products. So, the two things you really want to hit the world in the pocket, increase the price of food and energy, because they're the two things that we simply cannot do without, that we use each and every day. So inflation in the food and energy supply chain going to force the Fed's hand. They have to raise rates here. The meeting will come out Wednesday. I think we get a quarter point. That's all the economists, we got 99% chance that we get a quarter point. But I think you're going to hear a lot more discussion about the need to continue raising rates several more times, could be 7-8 more times, some of the economists have projected, and of reducing the Fed's balance sheet to slow down inflation. Are they going to make a mess of this? Sure, of course. They're the government agency. Of course they're going to make a mess of this. They mean well, but inflation, they never should have let it run hot in the first place. The theory that it's run below the 2% mark, the desirable 2% mark for so long, we can afford to let it run above. That sounds good in the classroom, guys, but it doesn't play well outside the classroom. This is the second time in my lifetime a Fed chair has intentionally let inflation run hot. Hasn't worked out so well either time. I rather imagine we're going to see some serious overstepping on the part of the Fed. When I look at the interest rate markets and the relationship between the different maturities, clearly telling me that sometime in mid to late 2023, the odds of a recession are increasing. They were already high, they're increasing as we begin to see the Fed act. So, anyway, the Fed is definitely going to raise interest rates. Market's not going to be really happy about it, but 25 basis points probably won't shake them up that much. If they go 50, that's going to rattle some cages. But I think the press release really is going to set the tone for every meeting from now on through at least the end of this year. We're going to see some sort of rate hike unless something goes dismally and completely wrong in the world. Oil prices getting whacked today. We were down about 6% last time I looked. And there's folks talking about, the conflict in Ukraine is not slowing down. It's going to hurt the global economy. Again, I think it hurts oil prices worse than it hurts the global economy. There's a higher rig count in the United States. It's slightly higher. It's going to keep going higher as people begin to, ramp production back up with the prices so high. Don't think it's going to accelerate and just suddenly explode, though. We've kind of talked about this a little bit. Oil producers are sitting there. They're not in a hurry to increase production. You've got companies like Diamondback Energy, that's FANG, FANG, Occidental Petroleum, Oxy. By the way, I know Carl Icahn sold, but Warren Buffett was the buyer of the shares, so I'm still pretty comfortable with the shareholder base at Occidental Petroleum, and I think the stock goes a lot higher. They're using the free cash flow, guys, to pay down debt, to do a whole bunch of things except ramp production back up and spend aggressively on exploration. The last time they did that in 2014 and 2015, the price of their stock got absolutely walloped. Nobody's looking for that anyway. One of the oil producers did say last 2 weeks ago that he wished the president would put out a cry for the oil exploration and production companies to start producing so he could justify it to his shareholders. But without that kind of national call to arms, he's not going to do it. He's going to keep his shareholder happy. Look, the governments, the environmentalists, they all don't like the oil and gas industry anyway. They've tried to pretend that they could just make it go away over the next 10 years by drastically curtailing supply, especially here in the United States. In the misguided belief that somehow renewable was going to replace the demand for energy. It's growing really fast, guys, but it's not even close to getting the job done yet, and it won't be for decades. So at some point, we will see the rig count continue to climb, but we have a supply-demand mismatch in oil and gas. It's pretty big right now. It's not going to go away. I think oil prices, they might not stay up here. I mean, West Texas crude is still up over $100 today. I don't think we have to stay over $100. Anything north of 70, and the oil and gas companies are making a lot of money, producing a lot of free cash flow. Somebody else that's really excited about the potential for oil and gas is Harold Hamm, the founder of Continental Resources, that's CLR. He bought $2 million worth of stock last week. He followed that up already today by buying another $17 million of stock. Now, even for the guy that once participated in the most expensive divorce of all time, $20 million in a week is adding up to pretty substantial cash and a decent sized bet that he thinks his company is going to continue to mint money, produce tons of free cash flow, grow the dividends, and buy back a lot of stock. So, and then looking around, I was flipping through 13D filings today, as I do just about every day that the markets are open. And I noticed that Engaged Capital, that's the smaller hedge fund that took on Exxon last year. They owned like 0.02% of the outstanding stock of Exxon. And they were able to force their way into getting 2 seats on the board in a proxy fight by hammering away on Exxon's need to move towards renewable and to quit, producing carbon fuels, which, as we just went over, is, really not a good idea. But they made the argument convincing enough. They did get some seats on the board. They've still got them today. Currently got a campaign going against Kohl's, KSS, the department stores, because they did turn down two pretty attractive offers for the company here recently at prices well above the current stock price. So they're sending them letters and harassing them and trying to force them to put the company back up for sale. I noticed today that they had taken an 8% new position in SciPlay. That's SCPL is the symbol. It's a mobile and online gaming company that's 81% owned by the gaming giant Scientific Games. That's SGMS. SciPlay makes the games you play on your phone and on your computer slot machine games, table games, every Monopoly game, a bingo game. Pretty profitable little business, growing at a decent rate. Scientific Games had made an offer to buy the 19% of the company that they already own. When they made the offer, based on the share price of the stock they were going to give shareholders of SciPlay, the deal would have been worth around $22 a share. Well, the stocks come way down to where the point where the deal would only be worth about $14 a share. Not all that attractive to SciPlay shareholders. So the independent directors committee met and nixed the deal completely. Hold on, I'm going over here to get the price for you. Let's see, PL. Yeah, it would have been about 14. SciPlay stock has sold off dramatically. It's down now at around 12. Engine Capital has stepped in. They're going to put up two folks in a proxy fight to try to get them seated on the board. And I think they're going to push for Scientific Games to go ahead and buy the other 19% of the company. They already own 81% of the company. They've said they're not going to sell the 81% of the company. We'll see how it plays out. This stock is priced as a bargain buy anyway. It's less than 16 times current earnings, and where other gaming stocks are trading at 35 and 40 times earnings. It's just 11 times expected earnings. Single digit multiple of free cash flow. We anticipate double digit growth rates up near 15% for the next several years at least. 20% return on equity in this company. No debt, strong balance sheet, excellent company fundamentals. Stock's probably bottomed here. If it's not at the bottom, it's really close to the bottom. Engine Capital is not a quiet activist by any stretch. They don't just buy 5% and make a few phone calls. They're loud. They send lots of letters. They put out lots of press releases. So I think there's going to be a lot of pressure here for Scientific Games to either buy what they don't already own or sell the whole company to another large gaming company. We'll see how it plays out. For a newer, smaller fund, Engage Capital has a fantastic track record already of pushing management to take the steps that unlock shareholder value, even if that includes selling the entire company. So I think that's a pretty cool special situation that you could put on right now. Very low risk, should work no matter what the market does. Might be a little bit of volatility. And I did look up and down the options chains. And for those of you that are experienced at doing so, I'm not going to get into a tutorial today on how to do it. The stock is an excellent candidate for selling an out of the money cash secured put. I also noticed that looking at banks with insider buys and that had low PEs and high dividend yields, Macatawa Bank shows up this week. That's MCBC. Bank's trading at just 10 times earnings, 3.4% dividend yield, a little bit over book value. It's in Holland, Michigan. Please do not think Detroit. This is all the way over it's on Lake Macatawa, but that kind of butts right up against the shoreline of Lake Michigan in western Michigan. It's more a part of the Grand Rapids municipal area, which is in much better economic shape than the eastern portion of the state that centers in and around Detroit, although that's actually coming back very nicely as well. 29 branches, $2.9 billion in assets. So it's just a perfect size for somebody to come in and buy it. This is a business bank. So a bank with a heavy residential book would do well to look at this bank and to consider it. About over 60% of the loan portfolios, either in commercial and industrial loans or commercial real estate. And then they have the usual mix of multifamily, which comes in about another almost 6%, and single family homes. But these guys are really good at what they do. They have a 0.08% non performing assets ratio. Um, that's one of the better ones of a $3 billion asset bank that we've looked at in a very long time. They have pretty much nothing on the books as far as bad loans, and nothing on the delinquent side either. Hang on here. What did I do? Oh, I left the letter off. Stocks trading at, oh boy, bear with me 1 second, folks. I'm sorry. Trading under $10, around $9.30. Bank is incorporated in 1997. Now that's important, guys, because it's the 20 to 30-year-old banks that are more likely takeover candidates. The 100-year-old banks, well, they kind of tend to have made it through all this, and they're going to be really reluctant to sell unless the board's getting elderly, and in which case, in this environment, they'll pick up the pace and consider selling. So this bank, I'm not going to be shocked to see this one taken over. Until it does, you get a 3.4% dividend yield. Would expect that to be increased. The bank is doing a tremendous job of writing business loans and commercial real estate loans in an area where business is doing very well and the economy is in excellent shape. So Makatawa Bank, MCBC, is your free high yield bank stock pick of the week. It had recent insider buying with one director making three separate insider buys open market with his own cash in the market over the past few weeks. So that's all I've got for you today. I will try to get back at least one more time this week as things begin to play out for the rest of the week. Anyway, guys, I'm Tim Melvin. Thanks for watching. I'll talk to you. It'll probably be around Thursday or Friday.